Hello friend, today we shall discuss about topic risk response strategies. Friend, today's topic is very interesting, especially if you have interest in project management or you are planning to give exam or PNP in near future. Friend, risk is basically an uncertain condition of a project for which you are not sure whether it will happen or not happen. It may happen positively or it may happen negatively for a project. So basically the main focus here is that if any risk occur positively or negatively, so what will be your response? Obviously for negative risk we will try to decrease the impact, or for positive risk we will try to enhance the risk. Okay, so basically risk response strategies are ways to handle potential problems that could impact a project or activity. There are different strategies based on whether the risks are negative, that means threats, or positive, that means opportunities. So we shall discuss in detail. For negative risk, which are basically a threat for a project, first approach or strategy is the avoidance. That means changing your plan to eliminate the risk or its impact. For example, if there is risk of a rain ruining an outdoor event, so move the event indoor. Mitigation is another strategy, that means taking steps to reduce the likelihood or impact of the risk. That means if there is risk of a computer system failure, install backup systems to reduce downtime. Transfer, that means shifting the risk to a third party. So that means for example, buying insurance to cover potential damages from a natural disaster. Acceptance means acknowledging the risk and deciding to deal with it if it happens. For example, if there are risk of minor delays in a project, you might accept it and plan to work extra hours if it's required. So then next is the for positive risk, that means opportunities. Exploitation, taking steps to ensure the opportunity is realized properly. For example, if a new technology can speed up production, so invest in adopting that technology immediately. Okay, so that is an example of basically taking it as an opportunity. Another is the enhancement, and means that for example, increasing the likelihood or impact of the opportunity. If there is a chance of winning a big contract, so enhance your bid by adding extra value to your proposal. Sharing means partnering with others to share the benefits of the opportunity. For example, collaborating with another company to develop a new product, sharing both the cost and profits. Acceptance means being willing to take advantage of the opportunity if it arises without actively pursuing it. For example, if there is a chance of getting extra funding for a project, so be prepared to use it if it offered, but don't count on it. So now we talk about the examples in detail. First one is the avoidance, that is the threat. Basically, a company planning to launch a product finds it out a competitor is releasing a similar product on the same day. So to avoid the risk of poor sales during the competition, the company changes the launch date to avoid clashing with the competitor. Mitigation threats. An event organizer knows there is a chance of a power outage during a concert. To mitigate this risk, they rent a generator to ensure the event can continue smoothly even if the power goes out. Transfer, that means threats. A construction company faces the risk of accidents on site. They transfer this risk by purchasing comprehensive insurance coverage that will handle the cost associated with any accidents. Acceptance threats means a software development team is aware that there might be some minor bugs in the first release of their product. So they accept this risk and plan to fix any issues through regular update. So that is an example of acceptance. Now, exploitation opportunities. A tech company discovers a new highly efficient algorithm that could significantly improve their software performance. They immediately integrate this algorithm into their product to exploit the opportunity. Then enhancement, that means opportunities. A marketing team sees a trend where customers are increasingly interested in eco-friendly products. They enhance this opportunity by developing a new line of green products and marketing them aggressively. Sharing, that is opportunity. Two startups, one with innovative technology and the other with strong market reach, partner up to develop and sell a new product. They share both the development cost and the profits. Acceptance, that is opportunity. A freelance graphic designer knows there might be an opportunity to work on a high profile project if the current designer leave. So they don't actively seek it but are prepared to take it on if it becomes available. So, by using these strategies, individuals and organizations can better manage the risk they face, turning potential problems into manageable challenges or even opportunities for growth as well.